Hello, Bruce. Thanks for joining us.
Yeah, great. Thanks, Scott. Thanks for inviting us over. Um, so everyone can hear me fine and see my screen? I believe so. Yes. Okay, excellent. All right. Well, what we're going to go through today is looking at liquidity, starting to understand it and the order flow. And this is going to help you make enhanced and better trades. And we're going to be using Bookmap here. Yeah, thanks for providing this opportunity to present with trade ideas. We have some, well, quite a few guys using trade ideas and then hopping over to Bookmap. After they do their filtering down in trade ideas, they want to look at the order flow. This is a really nice combination that we've seen, and maybe I'll show our Twitter feed later. Some of the guys are just knocking it out of the park. Really reading it well and have that bigger picture perspective using trade ideas. So this is a really nice combo. Anyway, risk disclaimer, trading equities and futures involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, a little bit about me. My name is Bruce. I've been trading for about 10 years in a variety of markets. I'm the order flow specialist here at Bookmap, and I lead the trading education expertise here in order flow and market microstructure. For more information about us, follow us on Twitter at bookmap_pro. YouTube, just search for us on YouTube, and then our support email is support@bookmap.com. I'm going to give you a link, well, actually several links here in the chat right now. Take a look at the GoToWebinar chat. There's some specials that we're going to go through at the end of the webinar, and this will be through trade ideas. These are not listed on the website or our website. These are a special specials that we offer our partners, okay? So I'll talk more about it in a bit. And I'm gonna give you, or I just gave you, the link to our educational course part 1. All right, and let me just go through that briefly right now, because we're gonna go through lots of different things here today. We'll keep it, for about 45 minutes or so, and then answer questions at the end. So roughly about an hour. But this YouTube video here, which you have in the chat, is just starting to understand. This is part 1 of our course, starting to understand basics here, really what moves price. Okay, and how important this is to understand, because we're going to extrapolate all of this kind of knowledge and data and look at it on much higher time frames. It is the same stuff. It is an auction, and it holds true even looking at a monthly time frame chart. All right, so the details are in this webinar. You guys have, or this recording here on YouTube, you guys have the link to it. I just wanted to point that out. Okay, so it's usually comes with for our subscribers, that link. So I just wanted to give that to you. So it'll be a follow-up to this. It might be a good foothold into understanding some of the liquidity and order flow if this doesn't answer your questions. Okay, so what we're going to do in today's agenda, we're going to cover the order flow and the basic market mechanics, okay, frequently misunderstood even by veteran traders here. So we're going to go through some of that and understand what really makes price move. Okay, then we're going to demonstrate how that can be extrapolated to all time frames, okay, and dig into some of the details and understanding the elements on the Bookmap chart. This is important, understanding liquidity, price structure, and volume, just 3 elements here. Okay, very simple, very straightforward, and very objective data. All right, and then we're going to go through, this is a really important part, is understanding, comprehending the context of these 3 elements in Bookmap. This is what's going to give you the edge, being able to read the order flow, understand this context of high liquidity and how the aggressive volume reacts to that high liquidity. That's where you're going to start to make really nice trading decisions. Okay, this is the purchase information. All right, well, let's jump in and take a look here. We're gonna take a look at today's action This is Bookmap here. We're looking at, well, we'll look at a handful of stocks here. This is what I have open from today. I have Apple, Amazon, AMD, Netflix, Twitter, Facebook, NVIDIA, and JP Morgan. Some nice stuff to look at today since, you know, the bank stocks are not going to do well due to the Fed announcement today, whereas tech, you know, saw a real nice bump to the upside. All right, so anyway, here we're looking at Apple, and we're looking at 3 elements on this Bookmap chart, and I need to define these elements. Many of you may have not seen Bookmap ever before, so we need to define the elements, what we're showing here in Bookmap. We'll try to go through it quickly because this is you know, pretty basic stuff, but if you don't understand what you're looking at, then this is, you know, not going to be very fun. Yeah, Arthur, this is recorded, and you'll have access to it in a follow-up email. All right. Okay. All right. So what are we looking at here? Well, it's Apple, and you see 3 elements on the chart. One is, well, let's close up our cumulative volume delta subchart here. We don't need that for now. One is best bid and offer. The other is the transactions on that best bid and offer in volume dots here. And then you see these big orange bands here. Well, this is liquidity. Okay, it's all derived from the order book and plotted on the chart historically. Okay, that's really the insightful element here, or the unique element in Bookmap, and we're going to take that off for right now, and we're going to find that at the last element here, and we're also going to take off the volume dots here, right? In fact, we'll even take off best bid and offer for the moment here, and now there's nothing on the chart. Okay, so we're going to put a 5-minute candlestick chart on here. We all are accustomed to looking at this view. Okay, it's 5 minutes of data within a period. Okay, a periodicity of data within the 5 minutes. There's a problem with this display. It is aggregated data within that period. So all sorts of price action that happens within that period is not, you do not have access to it. Okay, so when we zoom in here, okay, I mean, obviously this is the Fed FOMC right here, and unchanged, obviously. So, and as it unfolded, but more and more bullish. So very nice here. Well, we'll look at some of maybe these areas here on the way up. There's some pullbacks here. All right, so we have 5 minutes of data here, and what happened in between these 5 minutes? We have no insight. Okay, there's open, high, low, and close are the only data points we get every single 5 minutes. Okay, so the first element on the Bookmap chart is best bid and offer. Okay, this immediately breaks down the periodicity of data. You're seeing all the price action. See these little areas in here? See this little consolidation here, and then a breakout to the upside and a retest to where it broke from in this little consolidation area here. Okay, you simply don't have access to it. In fact, this is an important area here in Apple today. Why is that? Okay, we're going to draw on the chart here. Well, this little area right here of consolidation, if we take it across here, we can see the retest here, here, and here. Okay, so price accepted above this consolidation period. Okay, this little structural area here is important to understand and make trading decisions based around it. Okay, and you have no access looking at this candlestick chart. Okay, and we're just looking at one element only, and that is best bid and offer. Okay, so very, very simple, very straightforward, but offers a lot of insight. Okay, you can extrapolate that into bigger areas of consolidation and breakout. We can start to look at areas down here of a bigger area, right? Okay, here's another one down here, nice little flag pattern. In fact, you'll start to understand order flow now and patterns and how the order flow defines those patterns. Okay, it really starts to unfold here, and for me at least, it started to make a lot of sense, starting to understand order flow by or understanding order flow and then bringing back into my trading all the previous education I had about patterns. Okay, and then I started to understand why those patterns work or why they fail. It's due to what's in the order flow, and that's the context that we talked about. All right, so anyway, before I get into this too detailed here, let's add on the volume dots. Okay, now that's the transactions here on that best bid and offer. Okay? Now you may be looking at, for example, a footprint chart. You're going to see the volume very precisely recorded on your bar of time or volume or whatever the bar is, you know, point and figure, whatever. But the problem with that is still within an aggregated period of data. Okay, you still won't see microstructure, and you won't see the speeds of moves. Okay, and you won't understand the pressures of the moves in the order flow, and that's just because it's very simply aggregated within a period. So let's take off the candlestick chart, and now we're just looking at two elements on the bookmap chart. Okay, and let's zoom into an area here. Okay, and I just want to show you how simple and straightforward this data is. Okay. All right, so here we go, and let's just bring up the dot size a bit. Let's go into this little cluster here. Right. Yeah, there's some in between here. Let's try to make a simple example here. Yeah, this is good enough. I mean, due to stocks, you know, we'll be looking at stocks here, but you know, you can trade in the midpoints. Anyway, the best offer is the red line, the best bid is the green line. Okay, really straightforward. Okay, the next element are the dots. The green dot here represents a market buy order. Okay, a red dot is a market sell. Okay, note that the red dot takes place on the best, or the green dot takes place on the best offer. Okay, why is that? Is because this is a market buy. They crossed the spread, they paid up for it, they didn't provide liquidity and wait in the order book. Instead, they jumped in immediately and took liquidity off of the best offer. And the green dot paints. Okay, we have the specifics here if you want. This is, if we use a hover tool, you get the date, the time, timestamp. It can be very precise here. This is at 2:28 and 58 seconds and 380 milliseconds. But we can get down to the nanosecond level here. You see what was on the ask, and then what you see is the volume here. So this constitutes 100. Okay, it's 100 shares that traded. Okay, obviously the bigger the dot, the more. Right, now this is sell volume of 700. Right, so that's all you're looking at. Okay, very, very straightforward. Now some of these pie displays that you see here, see how this is for a volume of 1621? Well, what we're showing there, and it's showing mostly selling, right? About 2/3, a little less than 2/3 is selling, about a third buying. So let's zoom in here, because as we zoom in, what we're doing is we're pulling apart all of those transactions, and you can see precisely what trades here. Okay, now we're down at, if you look at the timestamp here, we're down at millions of seconds. We're looking at microseconds. Okay, just want to show you that we are very precisely recording what transacted here. Okay, we have a little bit of anomaly here due to the very, very quick action here, but anyway, I just want to cover that. First, that is very simple, and second, it's very precisely recorded. Every single market event here is recorded, so you're getting it all. But when we zoom back out, you know, we want to be able to read this on higher time frames, and we can by starting to just visually aggregate some of these bigger trades or you know, dots together into a bigger dot. Right. So the size and the color gives you insight to what traded, what type of volume it was, and how much. All right. Cool. So that's pretty straightforward. Okay, and we'll look at and we'll go through understanding this context here of volume within structure. Okay, it's critical to understand, like, well, nice big cluster of buying up here to break out to the upside, the consolidation period, but look here. More buy volume at a little bit higher high here. Now we come back into the range a little bit, but look down here. Okay, there's very little selling, if not, if any. It's exhausting out on the sell side. We don't find sellers here. So in an auction, if price can't deal at this area here, it rotates to where it can deal. And look to these previous volume clusters because it can transact there. It comes back to this area and it transacts there. We find buyers lift the offer and price exploration to the upside. Okay, this is very indicative of a trend. In fact, more buy volume at higher highs and that these little higher lows, look, it's exhausting. There are no sells here in these areas here, or very few, for example, here. Okay, you're really starting to understand now what constitutes a trend. How does the price trend? And we'll look more at this when we get into just the basic elements in basic market mechanics here in just a second. Guys, I see your questions. There's going to be a lot, I would imagine. So I'm going to go through this as quickly as possible to get to your questions. But there's some explanation that is needed here. Anyway, now we're just showing two elements on the chart so far. So very straightforward, and I think we all are pretty much on the same page here. We understand what we're looking at here. Okay, nothing really unique except that you're getting all of the price action, okay, and all of the volume that transacts. Now there's one element that's missing here, okay, and that is the depth of market, the dome. Now, the way we display that in Bookmap is over in the columns data here to begin with, okay, as a start. So we're going to relate this to your regular level 2 or your dome, your depth of market, right? And the way we're displaying it here is in this column called COB, current order book. Okay, here's our price ladder here. This is our last traded volume here, so 100 lot or 100 shares at this 189.05 price here for Apple. All right, so these numerical values you see here on the price ladder above current price, these are sellers. These are shares here. These are the number of shares that are available at these price levels. They want to be sellers up here. Only at these price levels, though. Down below, this is your depth on the bid. This is where buyers are lined up to buy. This is your auction here. Okay, now, these numbers, you know that if you've looked at your level 2, they're always changing. I mean, if we just kind of scroll forward here, you can see how quickly these numbers change, right? Well, it's very hard to follow these numerical values in a dome, your depth of market. You have to remember where that liquidity was, how much, how long was it there, did they pull? If they pulled, where did they add it to? Or did they pull from the offer and add to the bid? Did they flip? All of these things, and they happen very, very quickly. It is very tedious and difficult to follow, especially over time. Now, so what we do in Bookmap is we take those numerical values and we simply turn that into a heat map. Okay, so here you can see the big cluster of 189. Always look at especially in stocks, you'll see the liquidity is very typically at the whole numbers. Okay, larger players are always dealing or mostly dealing at these whole numbers. Okay, so at 189 even, we have 5,700 shares, and then that's the largest here in this view, in this time on the bid. Okay, at 189, and look at the heat map. The heat map is reflecting that large liquidity here with a color, this orange color. Okay, up above here, it's kind of reddish orange, as you can see. Okay, well, there's more liquidity up here. 7,700 shares are available up here at where? 189.50. Okay, again, a whole number or half the figure here. Anyway. And you can just see how important these areas are. We'll go through that in a second. But so that's where they're bidding, majority of them, and where they're offering the majority of them up here, right? So this is your kind of bigger picture of the auction. Okay, now there's all sorts of other nuances, of course, in here as well. Okay, but the concept is what we need to go over. What we're displaying in the heat map. Now the scale of the heat map is up here and top center of the chart. Red, orange on the right-hand side is the highest liquidity, followed by yellow, white, then blue, and then black. right? So you can very easily and quickly see the high liquidity here. Now, this is for kind of recent, historical view here that we're looking at, okay? But as you can see, we're zooming out. We can see this on much, much higher time frames. This allows you to use your DOM for swing trading, for example, or day trading on for the entire day, or scalping if you like as well. But it is a unique feature here to be able to use your DOM now as another element to make decisions on your chart. Okay, by zooming out, you now have access to that. Now, I've covered this many times in other webinars, but I still just I'm rather fascinated by it here. We're looking at Apple, and let's go over here pre-market. Oops. Okay. All right, so here's our 9:30 open, right? This is all the pre-market here, okay? The volume picks up here at 9:30, and look at the liquidity though. That's really what I wanted to show here. You already know where larger players are at 9:30. They're down here, the majority of them, at 185. Okay, they're up here at 187 and also 187.80, which is kind of odd. Usually, like I said, it's the whole numbers. You see them here at 187.50, and then here at 188, as you can see. All right. So you already have a nice map to look at for the day of where price might go and where you might want to deal. Okay, just by the open and understanding. Now, a lot of times you'll see them also in the pre-market, but typically at the open, everything changes, and the volume picks up, and everyone starts to layer in. They're waiting in line. They'll hold their positions for the most part here because they want to deal only at these levels. That's why they're jumping in so quickly and holding there. So let's say, for example, you're a fib trader. You look at fib levels. Well, match up your fibs with your liquidity. Okay, it will give you a lot of insight. Or if you're looking at trend lines, same thing. Match them up. Or patterns or price extensions or whatever it is that you're looking at. Look at the heat map here to see if there's liquidity to help you out. Okay, and that will give you a nice edge because you'll see these areas act very much like magnets. Okay, anyway, yeah. Well, the Fed, obviously here. Bullish news, keeping rates at a standstill. And it was, complex release today. Obviously, we have the statement, but there was the projections on the dots and also press release. Okay, so bullish all around. And you see the nice move here to the upside. Okay, interesting thing here. You may think, for example, by looking at this, why is all the liquidity on the offer only here? It's dark. Look at how dark it is on the other side here. This is actually very typical of a trend. There's no one wanting to deal over here on the bid, right? The bid, they're lifting the offer and they're being aggressive here, charging towards this liquidity. Okay. So you can see it kind of like a rain shadow or so, like all sorts of liquidity here on the offer, and then very, very little on the bid. All right. So anyway, those are the three elements on the chart, and those are just a little explanation on all of it here. Let's just now zoom in here and let's go through some of the basic market mechanics that we want to cover. All right. So, we zoomed in earlier and we showed this here, but all right. Yeah, here's a good example. All right. So now, understanding, it's always an auction, and understanding that we have, the best bid, the best offer here. It's truly the aggressor, okay, technically, that moves price. When someone comes in with a market buy order. They're taking liquidity off of the best offer. Now, so let's say there's 100, or let's say there's 1,000 lots or shares on the best offer. Okay, and someone comes in and they trade 800 of them. Okay, with a market buy order. Okay, so now there's 200 left. So let's say they come in with another 200. Okay, now they've cleared that area, and there's nothing on the best offer there. So what happens to the best offer? It pops up to the next area where someone else is offering. Now you'll get spreads in, you know, a lot of times they're one tick wide, but you know, some of the instruments are you know, pretty highly priced. So you know, like Amazon, you get like $1 spread or something. Anyway, it's where the next area is where someone's willing to provide liquidity. So at that point, now we've traded 1,000, okay, and let's say, you know, 2 cents higher, someone's willing to provide liquidity there. The next market buy order is going to transact 2 cents higher, okay? And that's going to move price. And that's how price moves. A very, very simple example. And then you can see like price did move up here. Okay, you can see the best offer went back and forth here, but nothing happened until this transaction here, right here. Okay, well, actually we had one transaction before on the best bid here, right? But then the best offer was here. Okay, so actually the best bid was even, you know, the offer went up, the bid went up, and then someone actually sold first here at a higher level here, right? And then we had the buy up above here. Okay, so here price moved, it actually moved up 1 tick here, okay, because the best bid went up, and then a transaction occurred. Price had moved 1 cent higher here. Okay, and then someone hit or lifted the offer here with their market buy order, and it moved another tick higher, okay, another cent higher. All right, so that's it. That's a very, very simple understanding here of what makes price move. Okay, and this is more of like the traditional or technical way of you know, of understanding it. Now, however, that said, there's another massive influence here on price and the aggressor, and that is the order book, where they're bidding and offering. Okay, so you might see, for example, certain areas, and let's see if we can find one. Well, here, okay, look here that we had pretty high liquidity come in and disrupt the kind of balance in the order book here. Okay, the price is going sideways, and then all of a sudden, high liquidity, and let's see how much it was here. Okay, so yeah, someone came in here. This previous area we had 500 on the ask here, 500 shares. Well, someone bumped that up to 7,400. All right, so you know, basically 69, you know, 100 shares more. Okay, all of a sudden pops in, you know, a lot more supply. All of a sudden shows up at an auction. Now, if there's a lot more supply, typically in an auction, okay, and you don't find buyers willing to buy it, okay, well, supply and demand here. If there's a lot of supply and we don't find buyers, we'll probably find sellers take it to a lower price. Okay, and that's what happened here. As you can see, the sellers started to come in here and hit the bid. Okay, so you know, there's a few different elements to understand here of what makes price move. Now, technically, resting orders or limit orders, and that's what these are here. These are all limit orders, okay, in the heat map. They cannot technically move price. They can stop price from moving, okay, but they cannot move price. However, that's just the technical definition. If you see large shifts in the order book in supply and demand, it can have an effect on price. Okay, that's what spoofing and quote stuffing and all of these other kind of nefarious activities are, you know, designed to do, to give someone else an advantage. Okay, we can start to see some of the algorithmic activity here unfold, and we don't have to look at nanosecond levels to see it. Okay, you'll see it by looking at even minutes of data. Okay, several minutes. In fact, I can show you an example in the Nasdaq futures today. We had some pretty good examples. We covered it in our webinars. Anyway, that's some of the basics here of what makes price move here. Okay. Now, what's important to understand is just those basic market mechanics can be extrapolated on much higher time frames. Okay, it's the same thing. When you see like a nice move like this here to the upside, look at all the buying. Okay, now not too much here actually. It really started to pick up here. Okay, but nonetheless, there's some buying in here. They lifted the offer. This is no different than that 1 or 2 trade example we went through. It's just with many more trades. Now this is actually a pretty good example here. Because look how we trade right up into high liquidity up here, and price stops up here. Okay, these limit orders here are absorbing the buying pressure, and they'd actually trade through a little bit, okay, but not enough to reach higher levels of liquidity. So 50,000 shares up here at 189. Okay, at least not on this rotation. So what happened here is, and this is look for this. This is a really nice understanding of a vacuum in price. Look at all the buying that happened here. Okay, quite a bit, right? And move price up. Okay, we know how price moves now, and we know that these limit orders can stop price, and they basically did. Okay, but we didn't find any more buyers to take it higher. Okay, and we found some sellers actually come in and hit the bid. Okay, not on a whole lot. I mean, yeah, not bad. There's a little bit of volume in here. Okay, but look at the move and trickle down to where it initiated. This move initiated from down here. Okay, look at the volume here. Very, very little. Okay, this is a low volume pullback. Okay, this is what it looks like. Right, look for this all the time. Okay, because you can start to place your limit orders in these areas here, or look to just get in with a market buy or a limit, a buy stop, but maybe after it dips down and you want the buyers to take you into it. Okay. All right. So anyway, starting to understand now liquidity and some of these price structures and what's going on here. Okay. Now, yeah, this one's actually kind of funny here, like because we see very little buying up here, you know, on the retest back up in this area, but price is just basically floating around here, just kind of aimlessly, basically. And the buyers make more of an effort here again, okay? And they come a little short here, right? And we just kind of go sideways again, but then they ramp it up. Okay, they ramp it up. They take on those 50,000 shares here. They trade through it. Okay, we get a little bit of a pause here, but they come in again, they trade through it, and we go from 189 all the way up into 189.30. Okay, in about looks like about a minute, you know, a little over a minute. Okay, so anyway, starting to understand now, and then look at the pullback, low volume pullback yet again. See how this is fractal. Okay, we went through the smaller example over here. Here's a bigger example of the same thing. Here's the strong move. Here's the low volume pullback to where it initiated from, and we find more buyers, and they take it not only to the high here, they take it higher, okay, and reach 189.50. Okay, so understanding these basic market mechanics is really critical. And bring that to your trading. Okay, starting to understand these things, you can start to really enhance your trading in specific areas. Okay, and get really nice fills, and also manage risk. Maybe take some off at the top here, or move your stop up. However you want to manage it. There's all sorts of different ways. Okay, anyway, yeah, that's just kind of the gist of it here. what is now, we're going to start to go through, we already covered like a trend. I think we'll hold off on that, and I don't have a whole lot of time here, so we'll move forward here. But now what we're going to start to talk about, and this is where it really starts to get important, reading some of these things. It's about the context here. It is an auction. This is not a math equation. There are all sorts of buyers and sellers doing all sorts of things. We want to understand the majority of them. Okay, what are they doing? What are their actions? For those of you trading auction market theory, like a volume profile or market profile, you understand that. You're looking at statistics of profiles to understand standard deviations, or where the majority of them are in a bell-shaped curve. Or maybe you're looking at many different profiles on a trending day to the upside, or whatever. But to understand the context of what's going on within that profile is what's giving you the insight. Okay, you're doing the same thing here. You're doing the same thing though, but you're looking at the volume here, the aggressor. Okay, you're also looking at it within the price structures that we've been covering. Okay, like this low volume pullback here is a beautiful one. This is a beautiful structure. Consolidations, trends, etc. Here you can start to see a reversal starting to take place here, right? And I'll cover this in just a second, okay? And why this is starting to take place. It's actually pretty nice little pattern here, okay? And you're going to start to understand now your head and shoulders, or your rounded top, whatever you want. Doesn't matter what you call it. Understand the order flow is what's going to define it. Okay, but we're understanding all of this here now, volume and price structure within the map of liquidity. Okay, and this is a nice edge. So it's here in front of us, and you see this behaving just beautifully within it. So what happened up here? Well, they come up and they don't, and it's the 50,000 is down here, shares, right? Here there was, let's see, about 800 or 8,600. Up here, it's just about 10,000. Okay, looks like actually around this point here is, yeah, 6,000 or so. But you can see they bumped it up into about 10, or yeah, about 10,000 here. Anyway, buyers here look pretty strong, right? We can see the buyers here, and they start to trade into this area. Okay, looking good. We get a few rotations, again, a little bit of buying here, but not like it was before, right? So we're going sideways here for a bit, and then we find a little cluster of, well, it's mostly buying, it looks like, down here. Let's zoom into this area. But look at the buyers on the retest back up here. Okay, where are they here? We're not even making a higher high. We're not even making an equal high. It can't even come back up to this area here, and we see nothing. Right? It's exhausting out. Okay, there are no buyers here. We start to see the sellers come in. Now they're breaking structure here. Okay, what we had before was this area of consolidation, plus we had, a nice little trend here. Okay, it broke. It broke on strong sell volume. Look at the sell dots come in here. Okay, now they're hitting the bid. Okay, where did they go? Well, we look at some of the high liquidity on the bid, as well as structure. Okay, the swings. Look at the swings down here. We go right to it, right? Okay, so you can start to target some of those areas. Now look at this area where we just broke from. Here's your low volume pullback on the bid, or on the buy side. Okay, right to it. Another beautiful one. Now I know this is all hindsight, but we go through this in the live webinars every day, every single day, and we see these things all the time. Okay, so anyway, right to it a few times here. Not enough buyers to trade through that area. If there were buyers who stepped in and traded up above here, and we see large buy volume up above that pivot there at this 189.38, it would be a different story. Okay, this would break then, but it did not, right? Okay, here it tested it again one more time, right? And nope, sellers come in and they start hitting the bid. Okay, so there's your reversal pattern starting to unfold and starting to understand it in terms of structure, volume, and liquidity. Okay, and the broken structure, and again, volume and liquidity. The target would be down here, okay, at 189. Okay, well, they came right to it and through it. Anyway, now I spent quite a bit of time on just Apple here. Some really clean examples though. You'll see this on all charts. Okay, yeah, you know, that's why I would encourage you to go. I put it here. If you came in late, I'm going to put it into the chat again. The educational part 1 of our course that you have access to now to start to understand these basic market mechanics again. All right. Okay. All right. Well, let's go back to our presentation for a second here and you know, start to wind things up a little bit. Okay, so we covered the basic order flow and market mechanics, and understand that could be extrapolated to all time frames. We looked at the liquidity, the price structure, the volume, and started to comprehend the context of these elements and price patterns here, for example, and starting to cover the edge that this gives you compared to other traders. Okay, now there's quite a bit more within Bookmap to go over. It's really not for the scope of this webinar, but you can trade from the Bookmap chart. You can, there's all sorts of studies. You can filter the heat map. You can filter the volume specific ways. You know, if you want to look at more liquidity or less liquidity, depending on, you know, what time frame or what you're comfortable with, it's really up to you. Okay. There's also some automated strategies, and we have an API as well. You can make your own indicators here and look at very specific order flow phenomena. Okay, it comes with the chase, escape, and execute strategies, which are really nice. They read the order book and automatically take trades based on what is the condition in the order book that you can set up. One more thing is the with the API and the one-click trading. Oh boy, what was I going to say here? Oh, it'll come back to me here. Anyway, all sorts of data columns over here as well, not just volume columns. You can look at trades counter, quotes counters, you know, all sorts of things here. We came from this HFT environment, okay, and transparency was what we were looking for to understand how our algos were getting filled. Okay, and we noted that this program that we developed for our own algos works pretty well on much higher timeframes. So decided to make this into a product here. All right, so yeah, something about the API I wanted to mention, which oh, the add-on indicators. Yeah, like for example, we have another add-on indicator, and this comes with the Bookmap Global Plus. Like there's a historical VWAP. That's not actually part of the add-on indicator, but the Iceberg detector. Okay, we can start to identify iceberg orders on the Bookmap chart. Okay, where we find larger players using hidden orders. Okay, they don't want to be seen in the order book. They don't want to show 50,000 shares or 10,000 shares at specific price levels. Instead, they want to have it hidden in the book, but have you trade right into it, and they'll just piece it out like maybe 100 shares at a time, okay, over time, right? But our algo can detect them. Anyway, let's see here. Was there anything else? And then we'll get to the questions. Yeah, let me just go through. I'll start to look at the questions here, but let's go through some of the pricing here, okay? Because for stocks, you guys are going to need DX feed. It's the only way that you can connect Bookmap to the U.S. equities. Okay, so again, here's that YouTube, which really breaks it down into some of the very basic elements here. So I encourage you to watch that. You might as well trade or show a few trades here. One of the guys I know that is very active in your room for Trade Ideas is Frank. He's been knocking it out of the park here. He hasn't been with Bookmap for very long, and he immediately picked up on it. He started to understand all sorts of things in the order flow, and this is from attending and going through the course and attending the webinars. And he was really able to read it very nicely here. We like very much his work, and you know, he documents it really well here. You can learn a lot from it. All right, and this is for equities, and he's very active. Okay, so we do that here in our Twitter feed. Is we will retweet other traders and you know, how they're using Bookmap. Here's another equities trader, okay, J Trader, and then you know, this is actually my Twitter feed from Order Flow Dynamics, and just starting to understand. And this is with the one-click trading here, so you might want to take a look at some of these, because it's documenting all the trades here, okay, which is really nice. So you can see where I got filled and what my ideas were of placing targets and stops and trade management. Okay. Oh, and yeah, other information here as well. For example, if you really want to compare Bookmap with the DOM, footprint, and volume profile, take a look here. Okay. We have a whole article and several videos that cover all of that here. Right. Anyway, I wanted to show that on our social media. And let's see here. Oh, DX feed. I need to cover this. This is important. How you connect Bookmap to US equities. There's NASDAQ, which is NASDAQ Total View and Last Sale. Okay, it's full depth of market, and it's $69 a month. Okay, there's also EdgeX, which is $59 a month, and then you can get both of them together. That's what I would recommend. The more data, the better. It's $119 a month, but for your first month, you get a special deal. It'll be 59 bucks. Okay, this is only data here, though. First, you need to subscribe to Bookmap. All right, so and let me put that into this link into the. I'll go through it here. Okay, just a second. All right, we'll do incognito. Okay. Whoops, sorry, wrong one. Let's go through it here. I've got it. Okay, so by clicking on the link that I put in the chat for you, this is where it's going to take you. Okay, and these are the specials that you can get through Trade Ideas. Okay, as an affiliate here. Here are the deals down here. Bookmap Global Plus. You'll get access to Global Plus for basically half the price, but it's for 3 months. Then it'll be $297 every 3 months after that, and this recurs every you know, every quarter, every 3 months. Or you can choose the Global Plus here for the first year. It's $588, so basically it's half off as well. Okay, these are nice deals. Then it's $948 for each following month. Or you can purchase Global Lifetime here. What this includes for a special is you get the free add-on package. It includes all of the Iceberg detectors, order book and balance indicators, etc. You'll get it for free for the first entire year. Okay, obviously this is the best savings here. You know, is basically worth about 600 bucks of savings there. All right. So and you have Bookmap for life there. Right. You can upgrade if you like, but anyway. Those are the specials here. They are not offered on the Bookmap website. Okay, so for example, if we go to the Bookmap website, you can also you know, get it monthly if you want, but click on packages here, and you'll see the packages available here. There is a yearly subscription, there is lifetime, and then there is monthly here. Okay, but you're not going to get the specials that we're offering. You'll have to use the link that I provided there in the chat. To come to the Bookmap specials here. All right. Okay. I think that's everything. Let's get to some of the questions. Yep, Arthur, it's being recorded, and the time frame on the candlestick chart was 5 minutes. Oh well, Glenn, you can trade midpoints with stocks. Okay, how transactions can happen between bid and offer, and not on futures though. So it either has to be on the best bid or on the best offer. No, you cannot trade FX. There's no centralized limit order book, right? It's all over the counter. However, Jan, you can trade the currency futures. I would recommend doing that. In fact, we have lots of traders who access the currency futures for insight to what's going on in the book and the volume, and then we'll take their positions in the spot market in Forex. Jan, I think DXFeed is offering access to some of the indices, not Forex though, but well, obviously you can trade the ETFs. Okay, so you can obviously you can trade that, and there's a book there for that. But the what was I going to say? Oh, indices, like not traded indices. Yeah, DXFeed offers them. Like you can look at something that does not actually transact, but get access to it. But otherwise, you can look at the SPY, or you can look at get a subscription to the futures. Okay, and note that the futures that CME is going to offer here micro contracts here pretty soon. So you might be interested in that, right? Okay, let's see here. What's more here? Pedro, let's see, is this data for stocks? No, it's stocks. It's for futures. We connect to 3 different types of markets: futures, US equities, and digital currencies like Bitcoin. Okay, many different exchanges for the digital currencies. No, Kyle, no ARCA. Okay, I know that that's a big one. So this is important. You are getting, you're not getting the full level 2 data. Okay, you're getting EDGX, which is BATS and CBOE, and you're getting NASDAQ, which is NASDAQ total view and last sale. Okay, but you're not getting access to ARCA. Okay, we're going to be adding NBBO and UTP here very soon as well, so you will get access to those. Right now, that said, Kyle, we have we have several professional, high-end stock traders. They've been trading for a long time, decades, and they still they're fine with not looking at the full, getting full all data liquidity providers like ARCA because of the visualization of Bookmap. They love it. They understand that, and they still find it offers a really nice edge. Okay. Let's see here. Oh, Nez, how do you identify trap traders? Well, yeah, we can cover that in the chart here. Yeah, why don't we try to get to that really quickly here? Okay. Well, I mean, you can kind of see a trap here, for example. See how it's not a whole lot of selling down here, so it's not really much of a trap. But see how it pulled away. The buyers pulled away from here and did not come and revisit this area here. They allowed these guys to kind of get out here, but there's still these guys are still trapped here. Who knows? Maybe they took a small loss and started buying. But you'll start to understand why some of these things actually behave or work this way. Again, like look at maybe some of the buyers up here, definitely feeling the squeeze here on the way down, right? Here's, they're buying the breakout, thinking it's going to come up into these areas here, and the sellers take it right back down, and this is the pivot, right? Here's the pivot right here at 189. In fact, you even see the retest right here. It goes through the pivot, comes back, retests, and more sellers. These guys are feeling the squeeze. Okay. Now you'll see it again and again. Pretty straightforward. Let's see here. John, who has the time to analyze everything on the chart? in just 3 seconds. That wasn't the point. The point was to show how the actual price moves. And here you can see we're looking at 5 minutes of data between each vertical line, but you can zoom out, like I said earlier, and you can look at the entire order flow for the day and look at much higher time frames. Okay, so now you can use your level 2 data on much higher time frames. Okay, it's a real nice advantage, I think. Let's see here. Yeah, Frank is in the Trade Ideas room, I think every day. Margaret. Will Bookmap make a chart that shows volume worldwide? Not sure what you mean. I mean, it's you're getting all of the data from EdgeX and from NASDAQ Total View. Okay, is there a single or a signature for short covering? Yeah, Vincent. Well, I mean, like for example, some of these guys on the squeeze, you know, or some of the quick moves, you know, you'll see. Yeah, there'll be stop runs. There's no question about it. Usually, what you see on like a stop run is you know, nothing but buying or nothing but selling, right? They're all triggered, and it's called like a book sweep. A book sweep could be an aggressor though, who just moves price away. Let's say they have thousands of shares, right? And let's say they hit the market buy button. Well, what's going to happen? They're going to take all the liquidity at one price level, and then the next level above on the offer, they're going to take all of it. And then they're going to trade above that and take all of it. They're going to sweep the entire order book until they run out of shares to trade. Okay, so that's how those kinds of things happen. It's also true that let's say someone triggers some buyers up above a certain area, and that will trigger even more buyers above them, and you get that natural sequence in same type of occurrence. Let's see here. Okay, Kyle. Yeah. So yeah, you'll use it without ARCA. Yeah, I know. I mean, I really think it still offers, you know, real nice visualization of what's going on. Okay. Oh yeah, it would be great to have it. But anyway, let's see here. Nez, cool stuff. Thank you. Yes, actually, Andre, that's a good question. For U.S. equities, you will need to use Bookmap for visualization unless your broker is Interactive Brokers. Okay, DXFeed allows, there's a bridge to connect DXFeed data. You make a transaction within Bookmap and it will be routed to your funded Interactive Brokers account. All right, this is the only one is Interactive Brokers. Okay, good question. How does it look in real time? I wish I could show you, Jeff. The markets are closed. You can replay. This is another thing here. There's replay mode. I forgot to mention, very robust replay mode. So you can record your data and then replay it for the day. It is an excellent way of debriefing your trading. See where you took trades or practice how you might take trades and go over it again and again. Very strong and powerful tool. Is this like reading the tape, Pedro? It's like reading the tape and a lot more, okay? Because now you have liquidity. Tape is usually just the transactions, not being able to read the liquidity, okay? And we can read the liquidity now. It's just, you know, as there is more software power and there is more demand for transparency in the markets, that's what you're starting to see here, okay? With products such as Bookmap. It is starting to unfold for us and it's giving us an edge. And look for more of that. There's going to be more and more of that. There's going to be a demand for it. Frank, yeah, come to the, if you want to see more demos, then come to our daily webinars. Okay, and on Friday I'll give you a link. Come to the one it's at 10:30 Eastern. I'll show you where you can sign up if you're interested. Okay, just go to our website here, and then let's scroll down a little bit more here, and you can register right under here. Get advanced trading education. Okay, here's where you register for the basic ones, right? Okay, but for the advanced ones, that's for our subscribers, but I will give a link to you on Friday so you can check it out. Okay. How does it handle penny stocks, Robert? Good question. We have actually quite a few traders. We have Hammer Trader and J Trader. I don't know if you have heard of them, but a lot of guys are looking at the penny stocks. We've had webinars with them as well. It's on our YouTube page. If you go to a section here, let's see here. Yeah, let's just go to our YouTube page quickly. Okay, hold on. All right, here we go. Okay, on our YouTube page, on the front page here, scroll down. Intro videos, order flow education videos. This goes through a lot of concepts that are in the order flow. Okay, absorption, layering, reversals, spoofing, etc. So, you know, these are really nice, small and concise videos here. All the different features are here, and then here are the professional traders that we've had features in some of our webinars. And here you get a link to some of the advanced webinars here that are recorded and available for you. But like I said, come on Friday and we'll give you that link. All right. Okay. Let's see what other. How chaotic is the environment in real time? Depends, Jeff. I mean, if you're zoomed in or zoomed out, but obviously the quick moves, you're going to see that on any chart. But you're still going to see the volume and you're going to see the liquidity. And what are the strategies to target? Well, the educational course we have goes through some basic strategies. But I do need to mention this bookmap is not a strategy. Okay, you can apply strategies to it. And there's all sorts of strategies you can apply to it. We are very objectively, I think as you can understand here, showing just these three elements. But from the simplicity and the visualization of these three elements, you can develop all sorts of strategies from it. We covered one today, which was just one, and it was that low volume pullback. All right. Okay, regarding the float and a low float stock, for example, actually, Glenn, I don't have any examples, but a lot of these guys here, I would recommend watching some of these videos here, like this one here, J Trader, this another one with J Trader, and then there's one here with Hammer Trader. They're all equities traders. Okay, watch those. They go through a lot of those low float stocks. In fact, they can be even easier to read because the larger player really sticks out like a sore thumb. Okay, and you can start to understand their behavior. All right, I got to wrap it up here. Just a few more minutes. So let's just have a few more questions as well. How can you see which ones are algos? Okay. Well, you know, I'm just going to go to the NASDAQ really quickly for that and zoom out, because we saw today some really nice examples of ignition algos and their behavior here. Okay. And oh, thanks, David. Fascinating stuff. Yeah, I'm fascinated by it myself every day. I was a bookmap client before joining the team, so you know, I was in your guys' shoes as well. All right, let's see here. I think it was yeah, it was around this time. Okay, and this is the NASDAQ E-mini here.